Awesome. Thank you very much, everyone. Welcome to another episode of RM Smart Investing. I hope everyone is doing wonderfully. I am pleased again to welcome Jean-Claude, our famous research analyst, our stock analyst, portfolio manager. We are doing our third episode of our stocks of the month. So far, we've done four. Today, we're going to do the Global Payments Inc., and that will be Jean-Claude. And then following Jean-Claude, I will do PayPal. And they're a little bit of related, but they're not in some ways. So uh, basically, we'll take it from that. And I'll gonna give the floor to Jean-Claude. And thank you so much, Jean-Claude. The floor is all yours. And we are ready to listen to you and take some notes. Thanks.
Thank you, Ramin. So today I'm gonna um, um, pitch Global Payments Inc. Now I don't own the stock. I've been looking at it and hoping maybe today's discussion will sway us one way or the other. Um, so Global Payments Inc. is a payment company. They process payments and offer software solutions to merchants, issuers, and then also consumers. Three-quarters of their revenues for merchants, and about one quarter is issuers like banks and credit card companies, etc. And then they also have a very small portion, about 2%, which is like consumers, like debit cards and things like that. And they're global. So and they've been growing through mostly through acquisition. And what drew me to the company is you can see here the line is basically their earnings. It's very, very stable earnings and growing and expected to continue to grow. Something I like to see. I don't like to see too much cyclicality or things like that, but this is pretty stable and growing. And you can see what happened to the price. So around around like 2015, 2014, the price started accelerating, and the stock got more and more expensive until around 2020, where it peaked, and it's dropped since. It's dropped significantly since, but as you can see, earnings haven't dropped. So, and earnings are expected to continue to rise. And this is what intrigued me about the company. I was like, okay, maybe this is looking cheap, and maybe it's a good opportunity. Looking at it on a relative valuation basis, in terms of PE, price of sales, price to book, and all these matrices, it's looks very, very cheap compared to its history. And looking at it from Google Focus's point of view, it has a rating of 88. It's pretty. It's the growth is there, growing at 14, 15% a year. Um, it's as we just mentioned, the value is there, and it's a pretty profitable company. Gross margins in the 60%, operating margin 20%, net margin 14%, and it has a free cash flow margin of 16%. So for every dollar they sell, they're making 16 cents in free cash flows. That's something that was very interesting to me. Um, what looked kind of strange is their return on capital figures, return on equity, return on assets, and return on invested capital are very low. Uh, so I'd like to see those to be a bit higher than that, but they are very low, though margins are very high. And so if you look at the overall score, you have high score for growth, high score for value, very profitable. And then in terms of like their technical momentum, it's not good at all because it's been dropping price. And then financial strength, they do have debt, and this seems to be what the problem is in the companies, their level of debt. So I looked at the debt figures, and this is debt to equity over the years. It came down after 2008, like after it was high at 2015. The debt to equity ratio has been dropping since, and then it has come up in recent years, 21, 22, 23. And they mostly use that debt, they use it for acquisitions because they've been growing through acquisition. And right now it's, the debt to equity ratio is at 70%, which is a bit high for me. I prefer it to be below 50%. And that's probably maybe why the stock has been, going down with the rise in interest rates. Maybe the market thinks that the company is going to get into trouble when they have to refinance at higher rates. I went into a bit more detail in terms of their debt profile, in terms of when that debt is due. And you can see in 2025 we have 1 billion due. In 2027 we have a bigger chunk, about 3 billion, and then 29 another 3 billion, and in 2031 3.5 billion. So these you know these maturities have to be refinanced over the following years. So I wanted to see how much free cash flow the company is generating to see if we can cover that debt. And the company, with their high free cash flow margin of over 15%, is generating, in the last 5 years, has been generating significant amount of free cash flow. In fact, the average of the past few years has been over $1.5 billion a year in free cash flows. So if you add all that up, if you look at all the debt over the next 5 years, it's about 9 billion that has to be refinanced. But if you look at the free cash flow, if we're averaging, 1.5 billion, and the company will be making that over the next 5 years, it will almost cover the entire debt that's due. So should the company not be able to refinance, you can cover it with the free cash flow that it's generating. And that's not taking into account the company does have about 2 billion in cash sitting on the balance sheet right now. So there's, that 9 billion in debt is actually, the net debt is actually more like 7 billion that needs to be refinanced over the next, 5 years. The debt rating of the company is triple B minus, triple B minus, so it's still investment grade. And I was thinking that, now that the Fed has cut rates and we're going into a falling interest rate environment, maybe that risk of, higher interest rate refinancing is, not as bad anymore. And we have a situation where here I looked at it, does free cash flow cover the interest and expense, and the free cash flow more than covers the interest expense multiple times. So I feel like in terms of their debt risk, it's not as bad as it seems. What's worrying to me about the thing that worries me about the company is those falling returns on capital. I like to see returns on capital, whether equity, invested capital, return on capital, in the 15% range. And for some reason, last 5 years, the returns on capital have been dropping. So basically, the company, although it has high margins, but in terms of the capital that it's employing, it's not getting the return that's required. So it's like at 4%, which is fairly low. So that's one negative that I have about the company. So looking at it, from a valuation perspective, it's dropped a lot from its highs. And if we look at the expected earnings over the next 3 years, and if we go back to our normal multiple of say 15%, 15 times, the normal PE ratio of 15, and if we, look at the expected earnings in 2026, if the price goes back there, that's a 35% ROR over, the next 3 years. And looking at the expected earnings over the next, more longer term period or 5 year period, and we get to a normal multiple, back to the normal 15 multiple. On average, it's been, much higher than that. It's been in the 20s, and now we're like at a ridiculously low level, below 10. If we just go back to 15, over the next, 4 or 5 years, that would give us an annual return of about 20% a year. That's very nice. Morningstar gives it a 5 star. They value it at almost $180. It's trading at around 112 at the moment. and they give it a narrow moat. I value my valuation an average. It's around 160. So I think Morningstar was 180. Yeah. So I come at around 160. The current price is around 112. So that gives us like a 30% margin of safety. In terms of the technicals, you see how, it was up to 220. We're at like almost a 50% drop. But we do have some, support here around the 90 level. We're trading at 112 right now. And I think that there is support down here. We're so cheap at the moment that I don't think it will drop much further than this. The company is making money, it's growing. So I don't see any reason why it would drop any further unless, we have a recession and we could drop. And I think from a risk return perspective, the intrinsic value around 160, I give it like a 25% margin of safety. So anything in this area here, I think is a good buy from a risk return perspective. I look at the Fibonacci's, from the lows here in 2008, 2009, all the way to the top. We're hitting the 61.8 level here. It's funny how it hits it a few times and keeps bouncing off it. So I think that's support here, another reason for support. So in terms of I know, Ramin, you like these Ichimokus. So I was looking at the Ichimokus, and so on the daily basis, we've gone through the cloud, and maybe we've hit a bottom here, and we've had some cloud support on the weekly basis. So maybe we can turn around here. So yeah, so that's my pitch. So my only like concern about it is those low returns on equity. So I think for that reason, I think if I were to buy it and I like the risk return from here, um, I wouldn't buy it as a buy and forget it type investment. It's not a compounder for me, but it is a stock that when it comes back to its normal PE, we can get a good return on it. And so I look at it more like a 3-year trade type deal rather than a long-term investment. And that's what I have. So Ramin and
Oh,
everybody, what do you guys think?
thank you so much, Jean-Claude. Yes, anyone has any questions before um, we go to the next stock?
Can you go back to the like first slides? I kind of missed the no, next one. Next one. Next one. Oh, it was after this. It was all after this. Next one. Next one. Yeah, right here, the capital returns. Um, so you said a term, it wasn't like you said something similar to like cash on cash return. Is that what you said,
Probably
JC?
capital employed. Like, so these are like the returns on equity, return on invested capital, and returns on capital employed. It's basically how much capital the company puts in to generate returns. And usually I like 15% or more. And it's the company for some reason, although it has high margins, their gross margin and their, let's see here, if you go back, their margins are very high, 60%, 21%, the net margin 14%. So it's generating high margin. I would like to see what PayPal is generating in terms of margins just to compare. So that's pretty good. But in terms of the capital that the company is putting to get this, it seems like it's not very efficient at the moment. It used to be more efficient, and the company is not being very efficient. So they're squandering some money somewhere. They could maybe use less capital to raise these numbers again. Because remember, they are highly levered. So we saw their leverage here, which was the debt So debt to equity, at 70%, they're highly levered. But despite this high leverage, their return on capital is still very low. So that's pretty worrying.
Ah, okay. And what is that? It says 4.56%. What is that 4.56% exactly?
So that is the return, the money. So for every dollar the company is putting down, it's getting 4.56% in return. We want to see more like 15%.
Annual, right?
Yes.
Okay, awesome. Thank you.
And then in the 2008, they were getting that. They were getting good returns in early years here, 2010. But then since then, they haven't been. That's why I don't like it as a long-term investment. I prefer it just for like a return to its normal PE ratio. But because imagine, Lucas, they have to pay back that debt. So if they pay back that debt, they have to put in more capital. And so these numbers theoretically will drop unless they do something, unless their margins improve.
Right, okay. So in what scenario would you look at it as a super long-term investment if the capital returns were higher?
Oh yeah, for sure, because then they're making money, right? So then they're minting money. Like if they're getting 15, 20%, because the return on capital numbers is what drives the value of the company over the long term. And if they have a moat and they're like if they're competitive, if they can keep their competitors at bay, um, and you have a moat and they're earning 15% a year on your capital, um, you'll grow fairly fast.
Okay, got it.
That's what you like to see.
Right, right.
This could be a result of maybe competitors coming into the market, and then they're not that capital intensive. I don't know why that's happening here. That's what worries me, and that's why I wouldn't look at it as a long-term investment unless that situation is solved.
Of course, that with combined with the high debt to equity ratio, right?
Yeah, yeah. I mean, so basically, this what's saying is that I can put my money in a T-bill. I'm making without leverage, you know, around 5%, and here I'm only getting 4.5. It's weird.
Right.
Mhm. Great. Any other questions or comments? Or we can come back to it again at the end if you like. Because I didn't look at it from fundamentals, so I got few technical, and this is a stock perhaps seeing there are some really good valuations out there as well. So maybe looking at more of a technical when it gets close to the support, that might be a nice play. It could be even a swing trade. And I just did a couple of technical analysis on this. So all right. As always, Jean-Claude, I love your analysis. So thank you so much. And we will be following this. So
I'm sorry, Jean-Claude, what did you say a good price would be to enter this?
So I think this is support here around the 90
Okay,
level, and the intrinsic value is around 160. That the way I calculate it on average around 160. So if we get back to the normal value, I think it's a good risk return. If it anywhere down here is a good risk return. But I look at it more like that type of a trade rather than a long-term investment, buy and hold and forget about it, leave it in there for 10, 20 years. And that's just because of those issues with the return on capital. This is here the weighted average, the VWAP. So right now, since the top, the average investor is losing money, but once we break that, um, then we
Okay.
make money.
To me, it looks a little bit oversold right now, just looking at the chart.
That's what I was thinking. Yeah, I mean, it's just come down like significantly, and it's hitting the Fibonacci levels here. It's kind of weird how it like hits it correct, like ding ding right there.
Mhm.
Yeah. Mm.
All right. Awesome.
So do I stop share, Ramin? Like I press stop share?
Let me just see. I
I
can.
stop share.
All right.
There we go.
Okay. And I'm gonna go ahead and share. Okay. I don't know why it's doing this, but so I'm gonna bring my slides. Perfect. Okay. Beautiful. All right, so we can see everyone is good. So, and again, thank you, Jean-Claude. So we got the GPN, we analyzed that. So I thought kind of this is on payment and the finance transactions. It's a PayPal. So before I do that, just out of curiosity, we look back, we've done 4 stocks in last almost 3 months. We did one on June 22nd. We did 2, Bristol Myers and Poet, thanks to Henry. And then end of July, we did Lululemon and Twilio. And I just want to show you, so it's funny how Bristol Myers goes to that $50 magic number and just gets rejected. So that 50, when it hit it, that was a good place to take the profit. And as we have talked about, our 18 months goal was like a 2-year goal was like 55. So that was pretty rapid target. And we also have had again, Poet has been a big winner. And end of July, we did Lululemon, which is up 8.5% as of today, and Twilio is up about 9%. So the portfolio, if you would have done it at that exact time, would have been up 23%. At the same time, really QQQ is flat. SPY is up as of end of today, which was a great day. So it's up 4.7 and Russell is up 12. So just a little food for thought. So what I like to do is analyze PayPal. And, of course, I think most of you are familiar with PayPal. It has become really a household name, especially in transactions. I know we used to wire funds, and then, we would have like set up an FX account or Amex account and transfer the money. PayPal has made these transactions a lot easier. And basically, of course, in the global payments side of things, it has been very convenient. Sometimes they have those 0%. You go to a brand and they allow you to, buy something and pay in installments. So it has a lot of uses. There is 27,200 full-time employees. It came in IPO in 2015. And that's important to know because of what has happened since then as we look at the charts. So basically, that's a food for thought. And so some of the brands, of course, we know the PayPal brand, but they also have Braintree. It's more of a merchant side. They have Venmo, many of you are familiar with that, but they have Zoom and Hyperwallet and PayPal Honey and Payday. So it is important to see that they have really gotten different as far as transactions vehicles. So they are based in San Jose, California. And I want you to pay attention to this. It's James Alexander Chris. Warren Buffett says he and him, late Charles Munger, they used to get in and they said they want to buy businesses that a dummy can run. So they really focus on the business rather than management. So if you have a really good management and you can understand the business and you think you're in a good business, that's golden. So I think James Alexander Chris, he took over, he's a young man, he took over in September 27th of last year. So he's made some strides in PayPal. And basically, as we'll see, the things that he has done, again, it's only been there for a year. Before that, for 19 years, he was with Intuit. So and then the technology side of things and the EDP. So one of the things before I go any further is it's interesting that how the news plays a role and what PayPal is doing. This happened yesterday, and now they have expanded their e-commerce partnering with Amazon. They're already doing with the Shopify. So this came out yesterday, and they are really, making it convenient for the payments. So to make it short, PayPal has the biggest products they have. Of course, the PayPal itself is a digital wallet, payment processing. They have a high limit compared to like Zelle. There's Venmo, and there's that Brain3, which is payment gateway for the online business. And basically, again, they work with Shopify. One of the things is that net profit margins at 14%, and the free cash flow is at 1.37 billion. I will dive more in depth into that. So one of the other things is, again, they have this partnership with the Shopify, and they have a partnership with Adyen and Fiserv. So you can see they're really getting involved with that. Right off bat, I have to tell you, one of the things that they have stopped them, or we will see the stock has come down, is that the competition, right? So like something like Affirm, which comes in, and I know like a lot of younger generations, they use the Affirm. It has made it's like almost like a layaway in a different way, and it has created competition. But also one of the ways that it affected PayPal is, they have those partnership that they really make payments with 0% for, let's say, 6 months, and obviously it affects their profit margin, but it's the volume they work with. So let's look at the valuation. This is from Guru Focus, and they have, believe it or not, and this is as of yesterday, by the way, this is September 18th, and they put a GF score of 99 out of 100. And why is that? Is for few reasons. Number one is their profitability, their valuation, their growth, and now they're actually picking up on the momentum. Their weak side is that financial strength. Again, this is as of last night. So, and we will look at what is that. So on the valuation side, they have put yesterday it was actually at $73, and Guru Focus has put a valuation of $94. So it is undervalued. As we shall see today, they went over $77, but they still undervalued. They were undervalued yesterday at 30%. So, and this is a chart of the stock. They were at $300 in end of 2021. And look at this big dive. So this zone, and that's what interested me, is creating value for us. So basically there has been, there was a big sharp movement, as you know, a lot of online and a lot of activities happened. Shopping happened because of COVID, and it was really overheated. And then next you see what has happened. And that's why I think that hiring a new CEO was important. So as you can see in a different measurements of value that like Guru Focus looks at, basically that from their own analysis, averages like $94. When we look at, and we will look at the discounted cash flow on a free cash flow basis, it's valued at 148. From the earning base, at $99. And when we look at the just free cash flow projections at $86. So basically, again, this was as of yesterday, it was at $73. So when we look at you can see the growth. They are 10 out of 10, and that's what when you look at that wheel, it was strong. Their financial strength is actually still pretty good, especially when you compare it to the industry. They are pretty strong versus their history. There are some again points that they need improvements, and one of them is that their debt to equity. When we look at the history from the Petrovsky F score, it is pretty respectable at 7. So they do have the two places that they need improvement is the high current ratio, which is really the liquid assets in the short term compared to the assets of their liability. And the other one is the gross margins are not year over year, are not as attractive. So these are the two. But other than that, they do have a lot of attractive fundamental reasons, especially like return on assets. And that's what we will look at more into that. One concern would be the Altman Z score, and they are in a kind of a gray area, and that's more on the liquidity side as far as the solvency side. So we want to pay attention then, and that's one of the reasons, of course, again, they are 7 out of 10. As far as the momentum, we look at the technical side, we see that the momentum is getting stronger and stronger. And even when we look at the relative strength, and basically compared to S&P, they're like at 84, 85. So they've been picking momentum. And this is, again, as of yesterday. So today they have even stronger. As I mentioned, the liquidity ratio, the current ratio, quick ratio, cash ratios, these are concerning. And the days sales outstanding, these are pretty high. So, but on the other hand, the days payable, that's pretty good. So we want this over this, so they have that money in hand. The profitability rank, on the other hand, is like 10 out of 10. Great gross margins, and free cash flow margin is attractive. And Jean-Claude mentioned about, return on equity, return on assets, return on investment capital. You see from the equity side and investment capital, that's pretty respectable. Return on assets, they are better than the industry, and we will look into that. As far as when we're looking at the earnings and we're looking at the revenues, look at the growth and the revenues, and there has been a nice acceleration and nice movement. So it has been growing, and that's what we want to pay attention. The EBITDA, we go back, and we were looking at the 2021, 22, and then what we see is there was deceleration. Now we have the momentum changed. As far as when we look at the cash versus debt, you can see again, they have made the improvements now, and they can cover that. And then, as we mentioned about the return on investment capital, so that's very important, especially the free cash flow. For me, it's very important in operating cash flow. So we want to pay attention to that. So basically, as we looked at, most of the revenues comes from the transactions, about 90%, which is about 27 billion. Only about 3 billion comes from the other sides, the other services. So and you see the healthy profit margin, which is at 46%, and that's important. And operating income is at 16.6%. So, as I mentioned, they have operation actually in globally. So, but in United States, majority comes from United States, which is 58%. That's 17 billion, and their other countries is about 12.5 billion. So they are global. So one more thing we always like to see, what are these big gurus do. And as we can see, since like in June, there were some activities. For instance, Dodge and Cox reduced a little bit, but then we had Mario Gabelli. He's he's been there for many, many years, great in media and other things. So he started purchasing. And so this is a little bit about some of these gurus, which they've had activity since June 30th. So they've done their studies. So one of my favorite things is the discounted cash flow. What we want to see is, again, how when we look at the cash is coming in, that's the most important thing in any business, in my opinion. How are they, when we doing the projections to the future, and we see that they actually, again, this was as of yesterday at $73. They are actually valued at 99. So that will be an objective. So they are undervalued. And what that means is right now they have a margin of safety at 26%. So which is attractive. And then when we look at compared to all the other companies such as Capital One or Discover Financial or even Synchrony, you see they are basically rated pretty favorably, and that's why we use the stars. You see the Capital One has a good margin of safety, but when we look at the reverse the discounted cash flow growth, they are in a very good position. The only one we can see is the credit acceptance score. But other than that, you can see that they are in a pretty favorable. And once we look at the technicals, you see even more so from the technical point of view. So one thing I wanted to look at is where they have been. As I mentioned, like in 2021, they were almost $300, and here we went down as low as like 60. So what are they doing as far as their PE ratio? They were at almost at 110 in the beginning of 2021. Right now, their PE ratio is at 16.81. So when we look at the charts, and one of my favorite things is the PE to growth. So I want to make sure I'm paying a low PE for high growth. So when you have, we can see that the PE to growth actually peaked in 2020, and it was giving us a heads up. And now, as we see that the PE growth is also very attractive. So basically, that's at 105. We were as high as 5. So for every dollar of PE, we're getting the same amount of growth. The other thing is, I think it's important in the sales, the revenues and the price to sales. Again, in 2021, we were extreme. We were over 16, 17, and also the price to cash flow. And again, in the last few years, it has been attractive. So we were looking for a catalyst. We were looking for momentum, and I think that has come. And now when we look at the, for instance, price to cash flow, we are at like 15.78, and then price to sales, it's pretty respectable at 2.47 compared especially to its peers. How about return on assets and return on equity? And as you can see, we had a big dip in 2022. We really peaked in 2022. As we talked about, the price has been cut tremendously, almost to the quarter of where it was. And yet, now we see that the return on equity and return on assets actually started surpassing where they were in 2022. So from the, again, valuation point of view and the profit side of things, it's making it more attractive. The last but not least, again, I love to see the free cash flow, but also I want to see the assets, or if we sold this company just basically based on book value, where do we stand? Again, when we compare it to where we were in 2021 and where we are now, we are in a pretty attractive position. So this the free cash flow, again, it's important, and that shows the health of the company. So let's go back again. This is of yesterday. So look at where we were yesterday. This is a daily daily chart. This is from FinViz. I try to use some of the, these are like even the group focuses, they're free. So they are not like the premium. So most of the time, sometimes you have access to some of these premium services. These are free. So like at PayPal, this is from FinViz. You see this really nice support, almost like a triple, quadruple bottom, like around $57. And we've had a really nice from the end of July, right after the earnings. You see the earnings came out and then boom. And what happened now, as of yesterday, we were hitting that resistance, the upper edge of that resistance, and we've tried to break it. We have failed. So it's interesting to look, go back like a Monday morning quarterback and see what happened today. So this was giving us a resistance, but we are nicely above all the moving averages. This comes today. So today we actually were up 6% and we are 77.57. With a nice volume, we broke above that resistance line. So remember, from valuation, fundamentally, so far it looks attractive. Now, technically, this was important to break. Sometimes you have to remember, after a big breakout, the market, the stocks like to come back and kiss that resistance zone, which is support zone. So we want to watch that. So there is a good chance. And if it bounces back, generally it's a good place to start adding to your position if it's old position, or start a new position. So it's almost the other thing is when I look at this, it's almost like a cup and a handle as well. So this was the handle and we just broke above that. So we want to pay attention to that $74 in the next few days, but I like this volume, which was important. The other thing, of course, it could have been the Amazon story. Looking at on a weekly basis, look at where we were, and we finally have broken on a weekly basis. We see that we have broken above our 50-week moving average. So this was again as of last night. So that also bodes well from the technical side of things, because we've been trying and trying. So that's attractive. Also, when you look at, again, going back to fundamentals, you have to remember PayPal is part of S&P 500. So naturally, when we look at the ETFs, it is part of SPY, but also it's part of the QQQ. It's in the financial services part of XLF. It's also like an internet and the Russell 1000. So it is a part of the big indexes, and it is a almost $75 billion company. So that's important to take into consideration. Also, analysts, they have started as of end of July, they've started upgrading. And generally, you have to remember about analysts in Wall Street. Once you see a trend, there's this herd mentality. And I've used this story before. A lot of these analysts, they don't want to be the black sheep. Although sometimes, when especially the bubbles are happening, sometimes it's good to be black sheep because you want to be independent. Most of these analysts are generally like to be on the buy recommendations rather than sell recommendations for political reasons, obviously business relationship of the company that they work with the company they're covering. So a lot of times they go to the same bars, they go to the same restaurants, they sit down and talk, sometimes drink the same beer. And generally, once one starts upgrading, that's contagious. So just a food for thought. It's interesting that August 9th, Daiwa Securities went from 68 to 72, and of course we have already surpassed. So it's really interesting. Sometimes they're usually late to the party. You will see the sell signals when it was like some stock was up at $300, they had no sell signal, and then when it hits like $70, they start coming with their sell signal. So yeah, just a food for thought. The other thing I want to look at is the short ratio, the short float. You see, there is consistency. We'd like to see a high short ratio, or we want to see if there is any anomalies. This stock has had, it's been floating as far as the short float. It's been like 2% to right around 2% most of the time. And the short ratio, the number of days it will take to cover this short, is under 2 days. So there's no pressure from short covering, but there are some shorts. So if there is a big move, well, sometimes it will affect them, so they have to cover. The other thing I forgot, like yesterday, we could see there was 13 million, and I like that volume was above the average. So we had a nice day. We were up nicely. And then today, when we look at what happened today, look at the volume was at 21 million. So we like this again way above the average. So the other thing I'd like to look at is the options. So again, this is as of yesterday, and this is, remember, Friday, which is tomorrow, is the option expiration. So yesterday, what happened, we see that as far as uh, the volume goes, just follow my cursor, you see at 75. Remember, the stock was at 73. There was a huge volume at 75 with open interest at 10,000. So we had 11,000 new money came in. So there was somebody had intuition, or had the goal thought that this stock could go past that $75. We don't see quite a bit in the put side. So what it tells us that this was not really a spread. It was more of actual new money coming in. Now, uh, when we look at a month from now, I want to look at the monthly expiration for October. Again, this was as of yesterday. We see, again, at $75, we have a nice volume and also a good open interest. And also at $100, all of a sudden, 1,000 contracts show up. Although, granted, it's like a penny or 5 cents it's asked, but so there is some bets going on. Also, as of yesterday, I was looking at the squeeze, and you see almost this, I mean, not sizzle index. I'm looking at the sizzle index. You see it's almost 2. And when I looked at the calls, you see the bid was at 17,000 compared to over 40,000 on the ask side. On the put side, we still see that we see the bids at 9,000 compared to ask. So there was favoritism to very much to the call side buying. I want to bring it back now today. So I want to take a picture after the close of the market. I want to see, we had 77.57. Look at the sizzle index. It actually went to 3.7. So we still have a nice volume at 62,000 compared on the ask side compared to the bid side. And the put side, it's a little flat, so it's not, doesn't give us, granted, there's like 15,000 in the bid and 19,000, but this is a healthy. So there's still some interest in this stock, telling us that there are things are happening. And then just looking at volume, we had at $80. This is for Friday. For tomorrow, we had 57.90 as far as the contracts come in. So let's look at some of the charts. As far as the charts goes, this is again as of yesterday, even the stock was at 73, and we had hit $74.40 was the 52 weeks high. And what happened? Look, we were at squeeze, and the A wave had already, well, this is actually crossing now. And the C wave has been positive. You see the light blue. So that's telling us that the momentum is shifting, and we only got two black, really, I mean, red momentum, and we are about to make a move. And we are above the 21-day moving average. The slope of the LRC is positive. This all happened after the earnings came out. And it's interesting that we gapped up, we closed that gap, and then we had another leg in the -1 standard deviation. So let's fast forward to today. Guess what happened today? Our squeeze fired, and A wave just went to positive. Now, granted, we are in that 1 standard deviation, we are in the 52 weeks high, but what has happened, again, we want to be wary of that. So just watch this. Every time we hit that 1 standard deviation, we went down. So my thought process, as I mentioned, because we are broken out, we might need a little digestion, but on a very short term. So before we launch the next leg up. As far as like expected move, this was our expected move. This is almost like 3 standard deviation. We had a gamma squeeze yesterday, as you can see, and this was a lot of pressure. And again, it's a good above the average volume. Last but not least, on this side of things, as far as the point and figure, this is as of yesterday again. So what did we do? You can see we had a reversal at 69, and now we are getting to the next and point of interest that we had before at $73, almost all, that 52 weeks high. And this was very interesting to see. Can we go higher? And this is all happened in September. So that 74 is presenting a magic number for us. What did we do today? Well, nicely, we have broken above that, and that 78 is. So until this reverses so far, the markets and the momentum is on the positive side. You see that on September 19th, which is today, we had ascending triple top breakout. So you can see basically we've had the tops, and then we have broken above that. So that is important. I want to also look at it from the weekly point of view. And again, on a weekly, you can see that we are against the 2 standard deviation, but we are nicely above the 20-week moving average. And again, how nicely this again corresponds with the earnings. We had look at this, we had a squeeze for a long, long time. And once the squeeze, as you know, once it starts firing, I like to look at 8 to 12 weeks bars, and we are only in the 5th weekly bar. So if you want to look at it as more of a swing trade, you still have some room. But as I mentioned, we might need a little digestion. The A wave is positive, but the C wave on a weekly basis is the momentum is shifting to the positive side. Also, I want to go back to monthly. Guess what? On monthly, we are in the squeeze. So this is very important. And this was as of yesterday. So I'm assuming today, I didn't look at the monthly today, but we see that 21-month moving average is at 74.27, which we broke above that. And we've broken above the 1 standard deviation. So I should have checked to see if it has a squeeze. We've had a monthly fire or not. But isn't that interesting how this squeeze is working with PayPal? Also, I want to look at from the when we look at the volume profile or market profile, and when I look at it on a weekly basis, so the point of control is that's where we are right now, around $64 to like $70, but the range is between $89 and $53, high and low. So the potential is that once the market profile, which is basically volume profile, where the most activities have happened, what price had the most volume, we see that there is room to grow at least to $88 And again, we've been all the way up to close to, well, over $280, or $279.95 when we go back to 2021. When I looked at it today on a daily profile, we see that, well, again, we've had a big momentum. So although it shows, you can see the volume on these prices, we just had only one day. So we'll see what happens. Your support is about $65.49 on a daily. When we look at the volume profile, on a daily, the market profile will be about $59, which that will give us well, if ever drop there, that would be a great purchase price at that time. But I think we have this momentum in our favor. Going back to our favorite Ichimoku. Now, what Ichimoku did, you see on a 60-minute on September 15th, it decided to break above its cloud. And you see this flat line, that tells us that there is a big resistance, and we broke above that. We have already been above the turning and standard line. We see the DMI is positive. It's been positive. So we had a lot of positiveness, but this on September 17th gave us the confirmation from the 60 minutes point of view. Also, we've had the 30-minute, we've had when we look at the 10 minutes. Now, one thing we went on 10 minutes, we see that the DMI negative is trying to kiss, and we are seeing that standard and turning lines there are crossing. So we want to watch that for a couple of reasons. I'd like to see if we can get a nice buy point. Although, again, on a weekly and daily, we are nicely, everything is positive. So that's good. On a monthly basis, we're coming against the standard line, but looks what happened to turning line. It is actually has pointed up. So if you break above this, then you can see we have a lot of room to move up. On a weekly and daily, goodness, there is no really resistance. So we got a lot of nice room to move up. So, that $99 fundamental, when you look at the valuation, could be, no problem. I just want to, on the short term, as I mentioned, I like to have a little retracement before we can launch another one for the buy side. And you see even on a monthly, the DMI negative, it's been negative, the DMI positive is trying to cross negative. It's been, that cross happened end of 2021. So it's been a long time. So watch the monthly on this one. Also on a very short term, I'll also look at something very short term, moving averages, which is the 3, 8, and 21 exponential moving averages. And you see those moving averages consolidated. We went oversold, and we bounced back. So these are all good news. Volume is good, and MACD is crossing finally. So those are good signs. As I mentioned, we might want to come back to that 3-day moving average before we launch. It's just from the technical side of it. So I hope that was helpful. Just a few slides I want to share with you with the GPN. This is again as of yesterday. We see that GPN, believe it or not, that's also as of yesterday was in squeeze. But we are sitting above the 21-day moving average, and we see there's a nice slope, and we are right in the midline. So although we are running against this, so we might again could have a little consolidation at this. So we want to watch that 21-day moving average, which is about $109. So we want to watch that. But other than that we want to watch the squeeze to fire up. As far as expected moves, that's another thing. Today, where did we go? Right against the upper edge of the expected move on GPN. Also, from the Ichimoku point of view, and I think Jean-Claude correctly mentioned, again, in the short term, we are still positive. The DMI is positive on all of them, except now we are back and forth on the 10 minutes. That's very short term. But on a daily, nicely above. The question is this weekly. Could we have a little, resistance in this area, which is a little over 113? And DMI positive is crossing the negative. So we just need a little confirmation. So maybe we'll have it tomorrow on a weekly basis. So what it tells me, we are comfortable to see a little coming back, but we are comfortable buying this when we have a little retracement. As far as looking at the point and figure, I see that we've had a nice move in September. Look what we have had. We had a double top breakout August 8th, and right here we broke above that, and then you can see how nicely now we just keep moving, and that was as of again yesterday. As of today, what we see is we added another X, so this has been moving nicely. So that's also positive. So one thing I also did something, so just bear with me. I don't see it here. It was more of as far as Fibonacci. So let me add that. So just give me 1 second. And while I'm doing that, any questions anyone has? Well, I did this Fibonacci extensions as a target for both, I think, for PayPal and GPN. It's not here, so I'm just going to add it while we are talking. So while I'm looking for that, any questions? Okay.
I mean, they both sound like super good stocks. It sound remain, just there doesn't seem to be any technicals against them.
Yeah, no, I mean, it's interesting of the timing of the things, and I think although the markets have gone crazy, but this is both of the suggestions. I think Jean-Claude looked at it. We were looking at more on the valuation, and you can see they already, from technical size, they've already have done their own moves, and it was not really dependent on the markets. They've had their own moves, and really interesting that we see the squeezes on both of those, and especially with PayPal, we see that the squeeze on the weekly and monthly and daily. So yeah, so I'm positive. As I said, it is something to do with the timing of things on the markets themselves. We are, still after all, it's September, October, we have the elections. But in my opinion, and I will like to have, of course, Jean-Claude's opinion, these are the couple of stocks that kind of are independent of the political side of things. So with that, if that's the case, I think they will offer a good value. It's just the timing of it. We can be a little patient, maybe, make sure there's a little consolidation. But other than that, I think they both offer good values. And yeah,
Also, I mean, I also think they've been beaten down so far
exactly.
that even if the market drops, let's say for recession reasons or whatever, I mean, these have come down so far that it's trading like at really cheap levels. I don't think they'll drop as far as the market would. I think we have downside risk protection just because of the big moves they've had.
Yeah, no, I think again, both of them, when we look at, I think the GPN still negative for the year. PayPal had a nice move, but for the longest time, you look at the monthly, for God's sake. I mean, this is where they were, and it's a huge drop. So that's what really attracted me to this. Of course, anything could happen, but the other part is, I think the lower rates would benefit both of them, especially GPN, I think. So it is, I think that also will help. It's just if there was a big recession, so obviously with PayPal, with the commercial side of things, but still they do have this transaction. People still, it's so convenient to send money, receive money, and at no fee transfer to your bank account. So I think they're pretty good businesses, both of them.
Also,
I
PayPal
own
kind of,
PayPal.
I'm sorry, what is that, Henry?
I guess I was gonna say that PayPal kind of has a moat also because I mean there's Zelle also, but other than that, there's PayPal and Venmo.
That's right. Yeah, it's
Right.
Zelle, and then as I said, there's Affirm on the other side of things. But that contract with Amazon, that was important. So as long as like the consumer, which I still, that we watching the consumer sentiment, as long as it's not gonna, we're not gonna have this deep recession, I think they will have the activities will continue, and so. Yeah, I mean, as I said, the only thing negative I could find with PayPal was the competition, and but they are really, the new CEO is working on different frontiers, I should say. So let me see if I can, because I added, sorry. So if it's not here, I've done couple of other slides that I did, and that was my targets using Fibonacci. So from the technical side, I just want to show you how I analyze to see where should be the exits. Jean-Claude nicely did, for the GPN using the long-term Fibonacci and how it nicely is in the ambush zone magic. So if it's not, please look for the slides, the PDF, and then what I'll do is I will add them. So watch for that. So there should be like 2 or 3 more slides added to the PDF. So.
I'll send you my presentation, Ramin, so you can add it.
Oh, brilliant. Yes, I appreciate that. So go ahead, and then I will just include it in our recording, so I can send it to everyone. So any other comments? How's everyone feeling? Did you like it? Is that something
That's excellent.
correct?
I actually have PayPal,
Oh, okay.
but I also sold a call at 72.50.
Oh, okay.
So I'm hoping it's going to pull back so I can buy that call back. If not, I'm still gonna make some money on it, even if it gets called away.
Oh, okay. All right.
Um,
Good call. That's good job, Henry. Yeah, I think, well, I'm not sure if you can go that low, but we'll see. I mean, you don't know. Tomorrow things can just, it's
no,
Friday, right? So it's and also you have to remember tomorrow is the so-called quadruple, but really it's a triple witching day, the option expirations. So just watch for
no,
that. So it could be a little
yes.
volatility because things have to roll, the options will roll. So who knows what will happen tomorrow with the options.
I'm just gonna wait and see.
Okay.
Because, I mean, my break even is around $50, so I'm not
Oh,
gonna cry about it.
life is tough. That's great. Good for you, man.
Uh-huh.
That's good. Awesome. All right. Um, what I'll do is I'll stop the recording, and then if nobody has any questions, I'll stop the, the charts so we can see each other, and then we can close. I will stop.